I think too many investors are focused on what stocks to buy, but no one pays enough attention on when to sell. Hi, I'm Michael Gable, Managing Director and Founder of Fairmont Equities.
Michael Gable, Fairmont Equities. Just start by telling us a little bit about yourself and Fairmont Equities.
Well, I've been in the finance industry for my whole career, working for both large and small firms. I started providing advice in the media back in 2010, and I still do that and still love doing that. But I started Fairmont Equities in 2013. So Fairmont Equities is a small advisory firm where we provide research and advice based on both fundamental and technical analysis. We have our own financial services license, so we are able to give advice directly to investors. But we are a small boutique. There's only 4 of us in the business, and this means we can be very hands-on and provide a high level of service to our clients.
Now, all investors are trying to grow their wealth or derive an income from their investment portfolio. But in your experience, what is the biggest problem or challenge that investors face, to really achieve success in that regard?
We live in an age where there is just so much information and knowledge available to the everyday investor. It feels as though the amount of information has grown exponentially over the last several years, but performance and profits for the individual investor haven't kept pace. They haven't gone up exponentially. So clearly, it's not for a lack of ideas out there in the market, a lack of buying ideas. I think the main problem is knowing when to buy these great stock ideas and then knowing when to sell. The problem with traditional research is that when the share price moves the wrong way, there's an assumption that the market has got something wrong. But I think the more you can leave your ego at the door and pay more attention to what the market is trying to tell you about your stock and about that sector or the trends, the more chance you have of turning a profit and trying to achieve the results that you can.
So Fairmont Equities, from my understanding, is not like a lot of other advisory firms out there. Correct me if I'm wrong, or just tell me what it is that you do differently.
It comes back to respecting the market, listening to what the market is trying to tell you and trying to observe the trends. And this is essentially the basis of technical analysis. So when I started Fairmont Equities back in 2013, most research and advice was just purely based on stock fundamentals, and it still is to an extent. There's always been a cottage industry of chartists writing newsletters, providing trading tips, but no one seemed to be marrying the two techniques or using the best of both worlds. I mean, my strength is in technical analysis, and it is in trying to identify the trends and find the right buy points and find the right levels to sell. So to me, it seemed obvious to try to combine both of those techniques to maximise our results. So when a client comes to us, an investor comes to us, they do so knowing that I'll have no hesitation in picking up the phone and telling them, look, this particular investment needs to be sold. And not all stock investments will make you money. There will be some losers. And I think the key is identifying those losers early on and making the call to cut those early. The market is full of examples of businesses which were supposedly great businesses, but they dropped quite a lot in value and just never recovered.
Okay, why have you adopted fundamentally this different approach to advice and investment advice?
Well, before the GFC, I worked for a large investment bank where the advice and the research, of course, was all fundamental based. And then the GFC came along and I could see the holes in that approach. I then worked for a small investment firm that was all about trading based on technical analysis, but that clearly had its drawbacks as well. So again, to me, it seemed obvious that we can take the best of both techniques and try to combine it, because it didn't seem as though there were any other advisors out there doing this in a successful way. And my conviction that this is the correct way has only strengthened over time as I speak to investors or new clients who come to me and they show me their share portfolios or they tell me about the stories of their old advisor. And I think it's easy for advisors when they get it wrong to just kick the can down the road and pull out the usual lines of, well, you're in it for the long term and you have to be patient and it will be okay over time. And often that's not the case. And again, you get some wrong, but if the ones that you get wrong, if you can limit those losses to only about 10 or 20%, let's say, it makes a huge difference, because once that 10, 20% loss becomes a 30, 40, 50% loss, and you have a few of those in your portfolio, it really destroys the performance. It's very hard to bounce back from that. So again, if you could use technical analysis to not only get you in the right stocks, but limit your losses, it makes a big difference. I mean, one common strategy I see is an investor will buy a stock that's a great company, pays a dividend, happy to take profits at 10%, but then will let it drop to that 30, 40% if it doesn't work out. But the mathematics of that strategy just never work out.
Michael, a lot of our viewers will recognize you from your media appearances, but how else can they potentially get in touch with you or get your ideas, get your help?
So best place to start is the website, fairmontequities.com. We do have a free newsletter that comes out every week. It goes to thousands of investors. All you need is an email address. But of course, we have our proprietary research where we do combine the technicals and the fundamentals, and we do offer a very generous 8-week trial to that research. And finally, if anyone is looking to access our advisory service where we help investors manage their share portfolios, a great way to start is with our free portfolio reviews. So we do offer free reviews, but again, all that information is on the website at fairmontequities.com.
Michael Gable, Fairmont Equities, thank you so much.
Thank you.